Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, March 3rd. I want to get right to a very important chart that I want to show you this morning, and then we'll go to the gold chart, the Dow chart, and the dollar index chart. First, take a look at this chart in front of you right now. This green line here that you see, the sharp uptrend, some sideways consolidation, then a blast off to new highs, is actually the price of gold in terms of euros. That is, this is what a European investor is seeing in gold right now. Because their currency is falling so rapidly as a result of the sovereign debt crisis in Greece and Spain and Portugal, the euro is rapidly losing its purchasing power against gold, and gold is actually at all-time record highs in terms of the euro. So if you're a European investor, you're looking right now at record high prices in gold. And that's significant because you're soon going to see this happen in terms of the US dollar as well. As I've been addressing over the last several weeks, actually the last several months, even before the sovereign debt crisis hit Greece, we are entering a phase of this financial crisis where the governments of the world are basically going to be seen for what they truly are, emperors with no clothes. They're broke. They're broke all over the world. The biggest debtor of them all is the United States. The sovereign debt crisis is beginning on the periphery, so to speak, with countries like Greece and like Portugal and in Eastern Europe. It's hitting Spain. It's now hitting Britain. We're seeing the pound fall substantially. We're seeing major crisis unfold in Britain. And soon this entire sovereign debt crisis is going to make its way to the United States. Right now it's causing the US dollar to move up a little bit, which is keeping the dollar price of gold slightly under wraps. That's why we're not seeing record new high prices in dollar terms in gold. But I have no doubt we soon will, and I have no doubt that this sovereign debt crisis will reach the US shores. The US, remember, recall, is the most indebted planet on the country. And for now, we're relatively safe as the debt crisis hits the periphery, but it will hit ground zero. It could begin to hit ground zero, the United States, within a few weeks' time, or it might be a few months' time. It's too hard to say right now. However, this chart of gold in terms of the euro is very significant. I wanted to show it to you because while we're looking at gold at the creep up now at the $1,140 level, in Europe they see gold through a different pair of glasses, through their currency, the euro, and they're seeing record high prices in gold. Clearly this is also translating into other commodities for them. We're seeing a substantial rise in oil prices, both in dollar terms and especially in euro terms. And this is what will eventually lead to very high rates of inflation around the world as we begin to see the fiat monetary system break down and paper currencies significantly lose their purchasing power under a crisis of confidence in sovereign debt, and central banks are going to have to print money like mad to try and stay alive. Let me now go to the gold chart. Again, this is gold in terms of the euro. I'm going to take that away. Here is gold in terms of US dollars. Last week, the last few weeks, we were focusing on this area here. I said that if gold would pop above the 1128 area and this lower support channel, we could see a move up to the upper boundary of this channel around 1160 or so. And you can see that's exactly what's unfolding here. Gold is up to about 1140 now. I expect it to hit 1160. As nice as gold looks in here, I'm not going to be an aggressive buyer or adding to any positions until we close above this high and above this upper resistance line. That would be my confirmation that gold has entered the next leg up and will make new record highs in dollar terms above $1,227 an ounce and likely go to at least $1,500, maybe even $1,800 an ounce this year. So you long-term investors that have been following me, you should be very happy indeed holding those core holdings. I'm glad we didn't hedge them. And you should be ready to add to your positions as soon as I give you the go, the green light there. Short-term traders, I am also waiting for a close above 1160 because at 1140, there's only about $20 of upside in gold. And on the other hand, if we get a significant close above the 1160 level, there's several $100s of upside in gold. So please, be patient, okay? We're talking about probabilities here. We want to have the highest probability of success in any of our trades, and that requires patience and waiting for the right signals. Let's take a look now at the dollar. This is the chart I've been showing you over the last several weeks for the dollar. We are still in a sideways consolidation period here. Given the weakness in the euro and the pound, it's rather surprising to me that the dollar index hasn't exploded higher to the upside here and is actually in the lower end of this choppy trading range here. That to me is a telltale sign that the dollar also remains in a long-term decline, and that this entire rally in the dollar index has been nothing more than a short-term rally within the confines of a long-term decline for the dollar. Once the debt crisis hits the U.S., the dollar could literally plummet out of control to the downside. And that's what we're waiting for here. I'm not playing the dollar on the upside because the downside is so much greater for the dollar. So stay tuned to my warnings and my signals on the dollar. We could be re-entering the long-term down trend in the dollar very soon, and you want to act on my recommendations there. Moving on to the Dow now. Again, this is the ongoing chart that I've been showing you. You can see that the Dow, pull that down for you, the Dow has done pretty much what I expected it to do. It's after falling to the midpoint of this void here down to 9,700, it's rallied back to 10.4. I said we'd test 10.5, 10.6. We've gotten slightly above this channel support line here, this cyclical channel support line. We're at a rather significant turning point for the Dow here. The Dow can either, at this point, continue to move sideways, begin to dip back down, or rally substantially up to the 10.8 level. I'm still leaning towards the 10.8 level, possibly higher, because of what's happening in Europe. The debt crisis in Europe is leading to a flight of capital out of the United States. Much of it is going into the dollar. A lot of it is going into gold, as I just showed you with the record highs in gold in terms of euros. And we're probably seeing some capital move into U.S. stocks as well, which could be enough to send it out to 10.8 or even higher. A little bit too early to say there. The ultimate safe haven for this crisis so far has been gold, and it will continue to be gold on a long-term basis. But there's also the very good chance that the U.S. stock market could benefit from the crisis that's occurring in sovereign debt. Long-term, I have no doubt that it will. Stocks often do provide a safe haven when capital is very frightened of the public sector and there's a loss of confidence in government. Certain stocks, namely blue chip types of stocks, can act as a safe haven. And I expect that to be the case long term for the Dow. Short term, the Dow is not out of the woods yet. It can go either way. It can move to 10.8, it can pull back to 9,400 or even lower. Too soon to say. So we need to stay very in tune with this market, the Dow, and how it's reacting to international capital flows, currency movements, and to gold. Till next week, this is Larry. Please, this is a critical period. Stay tuned to my Monday columns on Uncommon Wisdom, to my reports in Real Wealth, and to this video. Again, have a good weekend. This is Larry.